Good evening, friends. Welcome to our weekly deliberations on some economic and financial topics for discussions. Today's subject is Union Finance Budget 2023 and 24, which is likely to be placed by the Honorable Union Finance Minister Srimati Nirmala Sitharaman on 1st February 2023 at 11 o'clock. Before coming to the subject, I would like to thank all of you to take part in these deliberations and also request you to please subscribe our channel so that you continue to get our day-to-day notifications on various economic subjects, financial areas, management areas, business-related matter, legal matters, and get yourself updated on various topics, including bilateral issues. So therefore, once again request you to please register and subscribe our channel TCN Global Official. T for Tata, C for Calcutta, N for Nagpur. TCN Global Official. So please subscribe. Now friends, before coming to the subject, I will try to explain you what is budget, why budget is prepared, why so much hue and cry about this budget coming, people's expectations are going up. Normally it is not seen in other countries, but in our country, budget is something like puja type of celebrations. So 1st February is always our day of celebrations, day of expectations, day of aspirations, day of hopes. What is this? Budget is nothing but an estimated receipts and payments. Mind that I have not used the word integer. I have used the word. If you know the public accounts, you will see that public accounts are basically on cash basis. That means whatever you receive, whether it is capital or it is a revenue receipt, it is considered as a receipt. And whatever you make payment, whether it is capital or revenue or recurring, it is coming as payment. So it is a received payments. So what is budget? Budget is the projected receipts and payments for the next financial year. What is the next financial year? That is 23-24. 1st April 23 to March 24. Why it is required to be placed before the Parliament? In terms of our constitutions, the ministry cannot pass or cannot make any payment or anything without the approval of the budget. So if budget is not approved, by chance, for argument's sake, the ministry cannot make any payment, including salary payment. They cannot do. This is requirement of the country. So 1 month in advance, budget is presented to the Parliament. Once it is approved by the Parliament in both houses, that is Rajya Sabha and Lok Sabha, then it will form a bill and it will be an act, and thereafter the ministry can make payment, etc., etc. So therefore, budget is 1 year's hope, 1 year's expectations. Why we say hope? Budget is a mix of receipts and payments. What is receipts? There are two types of receipt. One is revenue receipt. That means the taxes. Why I call revenue? Because you can go on getting this money every year. It is not once. So it is a revenue receipt. So in the receipt side, we find basically only one item, that is revenue receipt. Which are the revenue receipts? I am explaining all this for the benefit of the students, teachers, professors, etc., who are not aware of this area. Maybe they are in the technical area, engineering area. So that is why I am taking the liberty. What is revenue? Revenue means taxes. What are the taxes? There are two types of taxes. One is direct tax, that is income tax. Income tax for individual, income tax for corporates, income tax for partnership business, etc. That is called direct tax. And what is indirect tax? Indirect tax is basically GST, as you know. And then what else? Custom duty. Whenever any material comes or whenever there is an export of certain products, the government gets a revenue, a tax. So it's called custom duty. Do not make mistake that custom duty is applicable only on import. It is also applicable on export of certain products, but mostly in import. So what we find? GST, custom duty, excise duty. Even today after GST, excise duty is there. That is for petroleum products. Which are those petroleum products? Petrol, diesel, aviation oil, and also natural gas. So what we find? Government's revenue is coming, one from income tax, second is called GST, third is called custom duty, and fourth is called basic custom duty. And these are, now there is no service tax, there is no other income. So income tax, GST, custom duty and excise duty. These are the taxes. These are received by the central government. Now question is that, do the central government keep the entire revenue for its consumptions? No. They have to share around 40 to 41% of the revenue with the states. It is known as devolutions. Again I say, out of total revenue, the central government has to share 40%, 40 point something is to share with all the states. States needs this. So therefore, after that, whatever they retain, that is the revenue. I'll come to that. So you have understood the receipt side. And what is the payment side? Payment sides are of two: recurring expenses, that means government's major salary expenses, interest expenses, pension expenses, that is revenue expenses. Every year they have to go on spending. Then most important is the capital expenditure. Like last year, the central government has allocated 7,50,000 for infrastructural activities. That is a capital expenditure. So one side you find expenditure, another side you get the receipts. Whatever be the difference between the expenditure and receipt, that is called fiscal deficit. Now, I will just give an example to understand what is the total size of the central government's kitty income. This year, that means 22-23, government expected in the last year's budget that there will be net revenue of 22.84 lakhs. 22.84 lakhs, there will be net revenue income, that is taxes, after making payment to the states. But what was the expenditure? Expenditure, I have told you, two types. One is recurring, another is a capital expenditure. So what is the total expenditure? 39.44. That means against 22 lakh, you have a total expenditure of around 39 lakh 44,000. So you have a deficit, and this deficit is known as fiscal deficit. So friends, nothing is rocket science. Please understand very carefully. So this is a fiscal deficit. Now how this fiscal deficit is to be made? Because you have to spend 39.44, whereas you have a net income of 22.64. So this 16.60 lakh crores, which is a deficit, government, what they do, they basically take it as loan. From whom? From us. Through whom? Through banks, insurance company. You are putting the money in the bank. Certain amount bank has to invest in government securities. And these are the securities which are issued by the Reserve Bank of India on behalf of the government of India. So now you understand the total position of the budget. In one hand, you have an expenditure of 39.44 and other hand, you have a 22.64 lakhs is your revenue income, that is taxes. Gap is 16.60. This 16.60 government has to take it from the public by way of issuing bonds, GOI, Government of India bonds, securities, etc. Now, if this figure is more, then it is a great shock to the economy. More you have a fiscal deficit, there is likely that you will be default in some. So therefore, every government will always try to reduce this fiscal deficit. But India is unable to reduce the fiscal deficit. Not only India, by and large 195 countries in the world, they are unable because of Corona. The government had to support to the BPL category, poor category by way of giving free rations. Fertilizer subsidy is a very important. So therefore, there was no other alternative for the government but to increase its fiscal deficit and to support the below the poverty line people. And I understand people are still getting free rations, but you know the cost of free ration for a country like us is approximately 3 lakh crores. So that has to go. The Food Corporation of India, they are procuring wheats, they are procuring rice and distributing through the various ration shops. So these are all part of the fiscal deficit. Now fiscal deficit last year was around 6.60%, which is very high. It is not acceptable. So therefore, first expectations in this year, in 23-24, because of Corona impact has come down radically. So therefore, this support might come down and therefore our fiscal deficit will come down from 6.60 or 6.70 of the GDP to around 6% this year. So first expectations will be that this year's fiscal deficit will come down, and that is a very good. But if you ask me what is the desirable level of fiscal deficit, I will say maximum 2 to 3%. I am not expecting minus or surplus because in a emerging country, always development is there. So if there is a development, there will always be a fiscal deficit. But anything beyond 3% could be a risky and it's not desirable. So I am sure we are also maintaining our fiscal deficit within this level, but because of last 2 years, 19-20, 20-21 and 21-22, all the countries suffered and naturally the countries had to borrow money to support its citizens. So first expectations in this budget, you will find that there will be a reduced amount of fiscal deficit, which I am expecting around 6% against 6.6 or 6.7 of 22-23. Now, what is the expectation? Budget means income tax, and people's expectations are great, particularly individuals. Yes, because individuals are highly hit because of the income tax, and it goes from their salaries or from their income, so they are more cost. What are the expectations? Why I am doing expectations is number one, These are all expectations because 24 there is the elections. So naturally, you have to keep the people happy, and the people are happy in our country basically once the tax rate is reduced. That could be one reason, and it's a emerging economy. Secondly, is that people have just come out from the corona impact. So naturally, people's expectations are great. So this year, people will expect it will be dream budget. We are expecting that first benefit may come is the exemption limit under ATC. ATC is basically deductions from your income, and the limit is 1,50,000 rupees. And all investment, particularly in the PA, NHC, LIC, etc., are all eligible, but maximum 1,50,000. We expect that this ATC limit might be increased, and it will be around 2 lakh rupees per person. This is our expectations. Standard deductions, particularly those salaried employee, they are to spend a lot of money to provide their services for coming, going, tiffin, etc. These are all expenses. So that in order to support that, there is a concept of standard deduction, and it is applicable only for the salaried employee, so that some part of their expenditure incurred for maintaining the services are also adjusted against their income. At present, the limit is 50,000 rupees maximum. I think there could be a possibility to increase from 50 to 75,000 rupees. Tax rate, there can be a change, big change. We are expecting that tax rate above 20 lakhs will attract 25%. At present, it attracts 30%. Rupees 10 lakhs to 20 lakhs, it will be 20%. So tax rate will be maybe 10 to 20 lakhs, 20%, and above 20 lakhs, 25%. At present, tax on 20 lakhs will be 30%, is 30%. So these are the most important thing. Next, deduction under section 80 CCD. We are almost sure that government will take a very encouraging decisions in this. 80 CCD is a pension on NPS, new pension scheme. And mind that in the new pension scheme, deduction is available only up to 50 lakhs. But the government wants to encourage people to put more and more money in the pension scheme so that their futures are determined, futures are secure. So in order to encourage that, section 80 CCD allowance might be increased from 50,000 to 1 lakh rupees. This is what expectations. One more important changes is likely to come, that everything will be now through TAN based. This will be applicable for everybody, including the partnership business, corporates, etc. Today we have to take several numbers. Like you have a Aadhaar card, you have a voter identity card, you have PAN card, then in a company you have a separate GST number, PAN number. In case of import exports, you have a IEC code, TAN number for tax deduction, several 20 odd registrations you have to take. Now, central government is thinking whether only one PAN will be sufficient to take care of all registrations. We expect, whether I know it needs changes in the law and it will take time, but we expect that there will be some amount of discussions on this matter in the budget paper, and a clear roadmap will be prepared, because India is going to be one PAN number, all compliances. So this is another area. Now today, super senior citizen are enjoying a tax exemption up to 5 lakhs. In this particular budget, we have proposed let there be a level playing field between senior citizen and super senior citizens. That means the exemption limit of senior citizens should be at par with the super senior citizen to 5 lakhs. So at present, senior citizens enjoy exemption up to 3 lakhs. So 3 to 5 lakhs, and it could be helpful to the senior citizens. That means those who are 60 years and above but less than 80 years. So these are another big important area. Now, in order to encourage the construction industry and allowing people to take more and more borrowings for dwelling house and constructions, the government may consider to give a special deductions for repayment of the housing loan. At present, housing loan repayment, so far interest is concerned, you get an exemption up to a certain limit, but the principal amount is available for deduction under ATC. But ATC has got several investments, so therefore, as a result, you hardly get any benefit, because Provident Fund itself will take care of your ATC or LIC will or pension. These three items will take care of your entire 1,50,000. So therefore, you really do not get any benefit for the repayment of your principals to the financial institutions for dwelling house. We are expecting that we have given a submissions to the Honorable Finance Minister to make a separate deductions, separate sections for allowing people to get the deductions on account of principal of loan up to a certain limit. Now, fiscal deficit we have already explained. Then capital expenditure. You all know, I have already said 2024 is the year of elections. Last year, government had a provisions of 7,50,000 for capital expenditure. That means roads, new constructions, Gati Shakti, etc. New ports, 7,50,000. Because investment in capital investments, that is infrastructure, creates huge employment and huge GDP growth. That is what most countries follow when there is a recession, that they ask government to spend more money even by borrowing for infrastructure investments. So it creates a huge employment, huge generation of money, huge consumptions, and obviously it takes care of your GDP. So this year, 2023, I am expecting that the government's allocations towards capital expenditure, that is road, shipbuilding, port, airport, Gati Shakti, water management, all these are all capital and infrastructural areas. Government's allocations will be much more than what it was kept in 22-23, which was 7,50,000 crores. So more investment is expected in the infrastructure areas. And next will be the long-term capital gain. Now, you all know that in 2022, there was an appreciation in value to the extent of 3.8%. People could make the money. It is the average 3.8% if you consider the Nifty December 21 versus Nifty December 22. So it is a 3.8%. But government is eyeing for a greater share of the cake from the long-term capital gains. So we'll be happy that if the government does not increase the rate of capital gain tax on long-term capital goods, long-term securities, because it might impact the capital market. Any tinkering with the capital market will have a direct impact in the share market, and it can have a negative inflow of funds to the country. Today we need lot of money, particularly in the foreign exchange, to have a very strong foreign exchange. Today we have around $561 billion, and out of which major part of that comes from the FII and FDI. FII means foreign institutional investor who invest in the share market. So any increase of tax rate on securities or shares might have a direct impact on the inflow of foreign exchange to the country. But there is a possibility, and that is we have referred. And next, another question is coming to regarding the tax on gold. According, government imposes tax on gold, silver, diamond, etc. in the form of custom duty, because these are not made in our country. Mostly 99% are imported. But any increase of custom duty on gold will increase the smuggling activities. Government in the recent past had increased the custom duty, and you will be surprised to know that in 2022, government had confiscated 3,000 kg, that means 3 tons of smuggled gold in 2022, and it is around 25% more than 2021. It is only because government had increased the custom duty. As a result, the prices of the gold has increased, and there was a scope for smuggling. So now the gold has touched to around 56,000 for 10 grams. So it is on the peak. I do not think there could be any additional tax on gold. So gold will not be touched. Gold is not expected to be impacted by this budget. As a whole, these are the major expectations from the individual point of view, but budget is not meant only for individual, it is also for corporates. It gives a clear signal what country is going to do in terms of growth, in terms of employment creations, in terms of agricultural growth, in terms of mining. So many areas will get a clear picture about the industry, about the climate is a very big issue. Then power area, all these areas we get a very fair positions that is available only in the budget paper. But so far taxation part is concerned, we normally discuss about the taxes which are applicable for our individuals, as I have already explained, but corporates are also there. And according to my opinion or feeling, not opinion, it is my expectations that now new manufacturing industries enjoy a tax rate only 15%. And I can tell you India is only the country where the tax rate is low. We had been making a lot of allegations against the government in the past that our tax rate is very high. But today, if a company starts its manufacturing activities before 31st March 2024, its applicable rate of tax is 15%. But I think this date will be extended further, so that more and more industries can come. But this is for only new industries, not the old one. Old one will continue to be taxed at 30% or 22% as the case may be. But for new industries, starting manufacture before 31st March 2024, as per present provision, the tax rate is 15%, and that date might be extended further to give benefit. These are the major expectations from the government in the coming year's budget. I hope it will be industry friendly, it will be individual friendly budget, and we might say that it is expected to have a very dream budget with a win-win situation, because the GST collection have started increasing. It is now around 1,50,000, 1,50,000 crore per month, which is around say 18 to 20 lakh crores are coming only from the GST. This is a very, very positive signal. And also another good point is that oil price which was around $135 per barrel is now little bit below $90 per barrel, and we can expect that it will come down further. This is a great relief, not only to the country but also to the people, because oil price is directly linked with the inflations, and we find that our price on petrol and diesels are kept at the same level for the last 5-6 months. There is no major changes. So with this I'll conclude, but I must tell you, please subscribe our channel. Without your subscriptions we cannot we cannot come back to you from time to time. Please subscribe. Our channel reference is TCN Global Official, and once you subscribe, you will continue to get these notifications from time to time. The recorded version of these presentations will be posted in the Facebook as well as in the YouTube in our channel. Thank you very much for your patient hearing, and again we'll see you on next Friday with a similar subject, but it will be different in other areas. Thank you very much.